Hello everyone. GBPUSD has come under sustained pressure in recent session, driven by a mix of energy-driven inflation risk, policy uncertainty, and shifting interest rate expectation. The pair has slipped into a clear downtrend, reflecting growing investor cautious toward UK outlook amid global geopolitical stress. On the macro front, the IMF has upgraded the UK's 2026 growth forecast to 1%, which is modest positive signal. Recent data, including stronger than expected first quarter GDP growth, showed the economy has remained relatively resilient. However, this optimism is tempered by rising energy prices linked to the Iran war, which are weighing on near-term growth. As a result, the recovery is expected to be gradual rather than strong, keeping the overall backdrop mixed for the pound. Higher energy costs are expected to push headline inflation higher and delay the return to the Bank of England 2% target by roughly a year. While these pressures are seen as largely temporary, the key risk is whether they spill over into wages and core inflation. This uncertainty has complicated the policy path for BO. The IMF believes the current bank rate of 3.75% is sufficiently restrictive and suggests holding rates for now. Importantly, it also introduced Dovish flexibility, advising the BOE to remain ready to cut rates if growth weakens. For the pound, this weakens the case for sustained rate support, especially against the US dollar, and increasing the risk of volatile range-bound trade. Technically also, GBPUSD remained bearish, trading below all major moving averages after breaking the 1.3460 and 1.3485 support zone. The next key support lies between 1.3140 and 1.3220. However, momentum indicators like the RSI are moving back towards neutral, suggesting downside momentum is stabilizing and the short-term consolidation or a modest rebound is possible. Any recovery, though, is likely to face strong resistance near the former support zone. GBPUSD remain under pressure with macro uncertainty and policy risk keeping upside, while technical hint at near-term stabilization. Thanks for watching.